The release of this report is the conclusion of a 2-year bipartisan investigation. It is a long report, obviously. It catalogs conflicts of interest, heedless risk-taking, and failures of federal oversight that helped to push the country into the deepest recession since the Great Depression. This report uses emails and other internal documents of the people who are involved and the institutions and businesses that are involved. The report tells the inside story of an economic assault that cost millions of Americans their jobs and their homes while wiping out investors, good businesses, and markets. High-risk lending, regulatory failures, inflated credit ratings, and Wall Street firms engaging in massive conflicts of interest contaminated the U.S. financial system with toxic mortgages and undermined public trust in U.S. markets. It's the longest report that our subcommittee has ever released. It comes at the end of the longest investigation that we've ever done, over 2 years. It is a bipartisan product of a bipartisan investigation that was bipartisan every step of the way. The threads that run through all of the chapters in this sordid story are conflicts of interest and extreme greed. The story starts with the largest thrift, WAMU, or Washington Mutual, selling tens of billions of dollars in dubious and often fraudulent mortgages, either directly or through mortgage-backed securities, creating a veritable conveyor belt of shoddy loans and mortgages, and in the process, polluting the U.S. financial system with junk assets. The next chapter is about a federal regulator, the Office of Thrift Supervision, OTS, seeing the danger but sitting on its hands instead of acting to oversee a bank on which it depended for 15% of its budget. The page then turns to credit rating agencies, Moody's and Standard & Poor's, which were giving AAA ratings to high-risk securities that were issued by firms that it was dependent upon, that they were dependent upon for their own business, which also was a clear conflict of interest. And when the securities collapsed in value, leaving pension funds and municipalities and other investors, they were all left high and dry. The final chapter of this book looks at investment banks, mainly Goldman Sachs, that created a huge market for shoddy mortgage-related securities, then packaged and sold them using deceptive practices, placing bets, huge bets, and placing secret bets against the very securities that they were selling to their clients, and then making big money when the house burned down.
I agree with Senator Levin that a significant conflict of interest led to this precipitous change in our country and in our economy. And they could have been identified in advance, but conflict of interest led to a lot of poor decision-making. And lack of transparency also led to a lot of poor decision-making. A lot of what we see in this report, had there been transparency, would have never happened.
Then you've got another but for the failure of our regulatory agencies. In this case, the Office of Thrift Supervision, because of the failure to supervise the bank after 500 notices of problems, doing nothing until we had the largest bank failure in history, by far. But for that failure, this problem may have been avoided, this collapse of the mortgage market. May have been. So it's a contributing factor. There's not one factor. There's a number of factors. But for the conflicts of interest, which caused our Standard & Poor's and Moody's, who people rely on when they see AAA ratings, but for their failures, their conflicts of interest, their caving in to the pressures from Wall Street banks to give AAA ratings to securities which didn't deserve them, and they knew it. But for that, you wouldn't have had the collapse of those securities. But for the greed and the misrepresentations, the deceptions of banks such as Goldman Sachs, you would not have had securities which not only failed, but which shafted their own clients. But the failure of those securities in the hands of pension funds, municipalities, when they all failed, you had a housing market whose collapse was just about, I won't say total, but huge. So you got, I would say just in this report, you've got 4 major causes of the economic collapse.